How's it going? It's Rocky. Welcome to week 22 of our $2,000 weekly challenge. As you know, the past few weeks, I've been trading exclusively the micro E-mini, Dow Jones Industrial Average, which is the MYM. And a lot of that was really to go back to the basics and then help my confidence go back up after that disastrous week that I had on week number 19. Which, if you haven't seen, I have the link above on that video that really almost ruined my trading account here. But for the past 3 weeks, I think I've got my confidence back up, and I'm ready to trade the E-mini again starting next week. But we're only going to go back to one contract because we only have enough cash to trade one E-mini for next week. But this past 3 weeks has been great, and for this week, I want to show you how we did for the week. And also changed it up a little bit on my trade analysis. I'm going to show you a live trade that I actually did today, Friday, June 4th. And one of that live trade that I did was actually this one right here, where we entered two contracts at 34,687 and ended up exiting at 704 and 701 because we were stopped out using our OCO. You'll see that live during the section, two sections after this. And if you look at it, if I waited a little more longer, I could have made a bit more money out of it. But really what I was focusing on the past 3 weeks was my strategy and being disciplined, which I think I accomplished. And hopefully we'll see how it does next week. So for the week, we did not reach our goal of $2,000, but I'm happy to say that we did reach a total of $1,597.51. So it was a short week. Monday was a Memorial Day, so I want to thank the veterans and those who made it, and unfortunately those who didn't make it. That's what the Memorial Day is all about. We celebrate that in the US on the last Monday of every May, just to honor those who fought for our country. And unofficially, it's also the start of the summer for a lot of the folks in the US because it is a 3-day weekend. And now that we're going back to a bit of a normalcy, I guess, so now we can celebrate 3-day weekends as opposed to having weekend every day. So for this week, Sunday and Monday, a bit negative there because I was playing around with the micro. It actually wasn't a good time to trade because the US market was closed on Monday, so it was a bit the signs weren't quite there. But glad to say that we had a positive Tuesday and Wednesday. Fortunately a negative on Thursday, but we ended the week well Friday by hitting over $1,000, and for that gave us a week of $1,597.51. And now to show you the transparency of the account statement itself here, you can see that we are still trading a lot with the micro. As you can see, the MYMs here, the maximum of 4 contracts. However, something I wanted to point out is right here, I finally sold that one E-mini that I was holding on to. I think it was ready for me. I was ready to move on from it. I've held it for 3 weeks and I'm ready to start fresh for next week. So that's the reason why we had a bunch of mark-to-markets because of that one E-mini that I was holding on. So every week, as usual, this is the money that I need to survive. So I do withdraw money to pay the bills. And we had a withdrawal here of $500. And a second withdrawal here of $1,000. So a total of $1,500 that we withdrew this week, which we are going to add to our ending cash balance. All right, now I have the calculator here and we'll show you exactly how we did for the week. So we did end the week at $15,000 and $15,044.02, but we did withdraw the $500 and the $1,000. So we're adding that to the end of our cash balance. And what we started with for the week was $14,946.51. And that's how we came up with our total of the week, of $1,597.51. And then just to break it down, something relatable. Again, this is gross, so before taxes. I like to divide that for what a typical 9 to 5 is. And a typical 9 to 5 in the US is 40 hours. So divide that by 40 hours. And for this week, our rate was $39.93. I'm switching it up a bit here. I'm going to show you a live trading that I'm currently doing. It is Friday, June 4th. It's about 10:45 a.m. Pacific time. And what we're looking at right now is the micro E-mini Dow, which is the MYM. And essentially, we are long on 2 contracts here. And what's open right now on that trade is about $9, $8. But if you think about the commissions and fees with 2 contracts back and forth, that's going to cost me roughly $10. It's a little more now since I've negotiated my my contract costs with TD Ameritrade. But as a ballpark, I just like to think as one contract back and forth cost me about $5 for commission and fees. So I just wanted to essentially show you what is going on in my head with this live trade that I do have. And then I'll also go back to 2 of my trades for today. So for this week, I'm just going to talk about my Friday trades. So as usual, on the left is what we have is a time-based chart, and it is a candlestick where the width of each candle is 5 minutes. And on the right here is a tick-based chart. So for the width of each candle here, it's 512 ticks or 512 trades. And what's different about the candles that I'm using is I'm using Heikinashi. It just helps me with the visualization. Okay, so I'm going to talk about exactly why I entered this trade. So I'm going to zoom in a little bit on this specific trade. So what we like to do is when MACD crossover occurs, that's when I like to investigate. And I like to enter when, so with this one, the crossover is showing a bullish sign. We are on the overbought side, which is when we like to enter a trade. And also you can see that the lines are diverging, and you can tell because the histograms itself is increasing there. And the reason I waited for entry until about 10 o'clock as opposed to entering at maybe at 9:45 here is I was waiting for the corresponding tick-based chart on the right to also be in agreement. So at about 9:45, let's see, around 9:45 when the crossover occurred on the time-based chart, we haven't quite crossed over yet, and that's why I didn't enter. And then it wasn't until 9:58 that the crossover did occur, and we are barely on the overbought side, and that's the reason I entered 2 contracts at 34,687. So what I like to do when I do then enter a trade is I draw a vertical line just to like remind myself, looking at the stochastic RSI and the MACD, why I did enter a trade. And then I draw a horizontal line of my average, which is 34,687. Just so visually I can tell exactly where I entered. And then what I do is I do an alert. And I do an alert at 20 points above, which is 707. And then another one at 30 point above at 717. So once we hit that 707, that's usually when I place an OCO. What does an OCO look like? I'm going to show you. So I have 2 types of OCO. I have one with a trailing stop and 7 ticks trailing stop. Sorry. So I have 2 types of OCOs. I do one with a limit on the top and a 7 tick trailing stop behind it. And another one is a 15 tick trailing stop. I'm going to use a 7 tick trailing stop when I am ready. And I'm going to wait until we hit 707 when we do that. And this is what that looks like. So as you can tell on the bottom there, we have a trailing stop that's always going to be 7 tick behind what the market price is. And on the limit, of course, you can bring that as high or as low as you want to. Sometimes what I like to do is I would just put it maybe like right here and then adjust it as you want to. But we're not going to go through that right now. We're just going to let it run its course, and then you may ask, hey, where's your stop loss and all of that? Yes, stop loss is great, but for my strategy, I usually want to wait until I hit that 707 before placing my trailing stop. But if you want to play it safe, do recommend just placing maybe a stop loss there to help you out psychologically. But for now, I'm not gonna put any any stops to protect this. I'll be right back. It's about 10:59 in the morning here. Well, actually, let's wait a little bit until we hit 11. Top of the hour, you see a bit more volatility. So maybe we will see it go up a lot quicker or maybe down, but at least we can react accordingly. 10:59:34, about 30 seconds. So let's just, watch that clock there, and we'll see what happens here. And I'm just gonna prepare my OCO just in case and react accordingly. There's 11 o'clock. All right, let's see if I actually know what I'm talking about with the increase in activity in top of the hour. Let's see how this works. What I'm actually going to do here is I'm going to split it. I'll do one with a trailing stop with 7 ticks, and the other one will be trailing stop with 15 ticks. I feel like we did hit that 707, but only for an instant, so the alert didn't go off. There you go. I'm gonna place that. So now that's as a 7 ticks trailing stop, and I'm gonna place another one with a 15-point trailing stop. And basically, I guess this is how I trade stress-free, per se. I'm already know that I'm locking in some money. With the micros, it doesn't quite work out because the movement is, you don't gain as much dollars per se, and then the cost of the contract is a lot more. But if there was, I'm still pretending like as if I was trading an E-mini, because this is the same strategy that I would use if I was trading an E-mini. Like for example, that 707, that 20 points, that would have been $200. So with this one, just add another 0 to the number you're seeing on the right, and that would be the money that we're locking in. But obviously it's a little less since we're trading the micro. But hopefully by me showing you this, you can see exactly, you got to be careful with the top of the hour. Sometimes it can be a bit tricky, and essentially this is how that works. So what I like to do is, at least for one contract, I like to bring it closer so it gives it a chance to actually hit that. But if not, I lock in something on the trailing stop. And then the other one is like my hopeful trade, I guess. That's why I have it a lot higher there. Oh, there you go. We're stopped out on one trade. And I think we were stopped out on 31,704 on that one. So this is something I like doing recently. I might do that when we're on back to trading E-minis. When I have 2 contracts, when I do exit, I have one that's more, conservative, and one that's more hopeful, I guess. It's been working out nicely. We'll see if the psychology stays the same when I'm ready to trade back to E-minis. So we'll leave this alone. And this might take some time, so I'll be back and show you exactly what happens when we're close to that exit, or maybe I'll just, speed up this section of the content here. Hey, it's now about 11:10 in the morning. 10 minutes since, the top of the hour there when we did hit that 707 and ended up exiting one contract at 704. I'm just, I sped that up so you're not just watching empty content. I'm just rearranging the charts here so you can sort of visualize what's going on. Just pay attention to, our average price here is 34,687. PL open, profit loss out open, is at plus $13. We do have a trailing stop, an OCO with a 15 tick trailing stop here. And then, you know, with this one, I think I'm going to adjust that a little bit. Actually, I'm just going to put that to maybe 750. Oh, look at that. I had another one there. So this is very important. Sometimes when you trade, you should flatten before doing anything, because I almost forgot about this right here, which I had earlier. So I'm going to remove that. I'm going to adjust this to an exit of 750. Again, you know, hopeful way of doing this. And just so I can watch this closer, I'm gonna place another alert at 725, so I can, you know, remind myself to maybe either adjust my OCO or exit the trade. But you know, so far I'm locking in that $7. So it's a free trade, and again, you might say, what's $7? That won't change your life. But this past few weeks, since my little mistake a few weeks ago, you know, I really come back to my basics, focusing on the strategy I'm using, and then, you know, I'll scale back up when I have the cash enough to trade 2 E-minis again. So I'll be right back when we do exit, and I'll fast forward this portion of the content. It's 11:12 in the morning, and we'll see how far this goes. Hey, it's about 11:18, and we were stopped out of that one, 34,701. So I'm just gonna draw this vertical line here just to show you exactly, not to show you, I guess, but for me to go back to later to analyze the trade if I wanted to understand why what I did was right or wrong, or exactly what I was thinking throughout all of that. Anyway, for this trade, I'm just gonna go back real quick to here. You know, not the best as far as dollar wise, you know, it's just $15.50. That's before commissions and fees. So really not profitable at all. But, you know, what I was focusing on is on the tick count itself, and that's what I'm going to talk about here. So our first contract, we're stopped out at 704, and we entered at 687. So that was 17 ticks. So that was good. And the other one, 701, and stop out at 687. So, oops, did not do that right. So 701, stopped out at 687. So 14 ticks. So 17 ticks and 14 ticks. You know, that's still enough for me. If I was trading the E-mini itself, I would have made about $150 from that trade. But it just goes to show you how, you know, the huge difference on trading an E-mini and a micro. But I want to keep my strategy the same, and I would be doing the same exact thing. The only difference is the dollar amount that I would get or lose is a lot higher if I'm trading the E-mini. Anyway, just wanted to show you the 3 trades I had for this Friday, and also, you know, wanted to show you what was going through my head in the middle of a trade and how I exit a trade there. So hopefully you enjoyed this content. Hopefully you learned something. So please do subscribe if you did, and if not, give me another chance, and hopefully on the next content you'll learn something. All right, have a good one.